Mr. Mark Selby, how are we, sir?
Excellent. Good to see you again, Mr. Matthew Gordon.
Well, you're looking well. You had a few days off since we last saw you. Were you trekking up mountains or swimming rivers? What were you doing?
No, just a little work up at the cottage to get done. So it wasn't as much of a holiday, but just been busy with things at Canada Nickel. So,
well, we're going to talk about that in a bit, along with some other company news, because there's a lot going on in the nickel space. But I guess we better start with a customary overview of what's happening in the nickel market. Things have come off a bit. What's happening?
Yeah, so nickel is sort of got caught up with the rest of the ferrous metals in terms of iron ore with the Chinese power rationing, and that's causing concerns for people in terms of underlying demand. And again, stainless steel is getting hit, so you're seeing stainless steel production cutbacks. But the thing, I wouldn't get so concerned about with nickel, and I think the reaction's a little overdone, is, those power cuts also cut the production of nickel pig iron. So, again, I think this is just a broader move, for the Chinese to really start to squeeze out those, specific activities in the economy that use a lot of water, air, and don't generate necessarily a huge amount of value add that stays in the country. So, again, I think that as we move forward, I think again this will be just one more driver to see Chinese nickel pig iron get squeezed out. Again, all of that pollution is getting exported to Indonesia. Fundamentally, LME inventories are ticking down. We're now at the lowest level over the past 5 years, other than, there's a bit of an engineered squeeze that happened. People sucked off a whole pile of inventory and then dumped it all back in within a 6-month period, which does happen. But, again, given the size of the deficits that we talked about last week, the kind of inventory withdrawals that we're seeing, are pretty consistent with that.
It's like we talked last week or last time out about Evergrande and the knock-on effects there, and I think a lot of people are quite nervous. And so some of the narratives that's going on in the market is not just this energy squeeze. I hate to use that phrase. The Chinese government going to their energy companies, go find us some energy at all costs, get on with it. And that's all that we're talking about here in Europe as well at the moment is as well. But it kind of feels like a sort of old version of Sim City, where you're just remembering to the bits just sort of need to be pieced together in the right order. But the big narrative that's happening at the moment, and no CEO can give me a comprehensive answer as to what on earth is happening in the marketplace in terms of the divergence between commodity prices and equity prices. What's your version?
No, so my version, and again, we talked about this last time. I mean, you get these great openings that happen. And again, I used the example last time when it was with Inco and Falconbridge back in 2005. And, again, fundamentally in the market, nothing wrong, but we were caught up in sell in May and go away kind of sell off. And so our stock and cash bid, fell away against Falconbridge, and we ended up, going to having Phelps Dodge make a bid for us so we could prop up our bid for Falconbridge. And so, and I think it's a combination, it's September, October, this is May and October, the two times where you do get sort of broader risk off sell-offs. Number one. Number two, I think, a lot of stocks have had a massive, the mining equities in general have had a pretty massive run over the last 12 to 15 months. And so people are like, okay, do I see another 10X in a Capstone or Taseko from here after just getting a 10X in the last 12 months? So I think it's, that layered in with the sort of macro noise around what's going to happen in China. I think, that once the macro noise fades away, once we get past October, I think it'll shape up for, come December and January, it'll be one of those things, again, and a lot of people pile back into a story in January. A lot of funds made a lot of money all year, and do you really want to take a chance on, blowing your bonus that you've just made because you've shot the lights out on your fund that you've managed the last 9 months on some volatility in the fourth quarter? So it's like, just park the cash. I'll dive back in, in January or on the last day of the quarter. So it looked like in the quarterly statements that go out, it looks like I own that stock all quarter. And so, to me, as long as the macro doesn't blow up, is I think we're going to be a pretty nice rally, of the kind that we saw 2005, 6, 7, where people realize, okay, the prices are going to be higher for longer, and this is an attractive entry point to get into a pile of these names.
You hit upon a kind of a thought there, which we get a lot of these inbounds every day of the week. You get all this inbound, and some commentary, some sort of slightly angry young person yesterday going, well, I don't know if they're young, but young in thought, is like, oh, the uranium sector is being controlled and manipulated by outside forces. Oh, silver is being controlled by outside forces. And I don't mind having those conversations because I'm sort of intrigued as to where that thinking comes from. But with bigger sectors with bigger commodities, it's harder to do that. It's much more reliant on the fundamentals. No big one institution or groups of institutions can kind of come in and control it. Can it?
No, they've tried. There's been several attempts to try and do that in the past, and if you're the copper trader who was a Mitsubishi or whatever who tried that, and that blew up, and then the Hunt brothers,
Nick, I think he's called Nick. I met him. Several years later, bouncing around Europe, Switzerland, I think it was, in Geneva, and he broke that story down for me. Fascinating. What happened there? But that's one for another day. Yeah, I remember
that's
that
for another day. And over a glass of wine too.
Yeah.
So no, it's in general, it's pretty, you can manipulate a bit in the short term, but it is hard to sort of, really drive a commodity on for a sustained period away from the fundamentals. So, that's why, again, these gaps do open up. And if you're brave enough to step in, then things work out. The other big part too, right, is again, when you're on a massive upswing, you've got all the technical traders, all, who don't care really what they're buying underneath, but they're all just piling in because the technicals are favorable. Once you kind of level out, and if the macros force you to break below, certain moving averages, then your share price. I mean, our share price, the project's better than ever, and our share price has dropped a third in 4 weeks, just on technical trading, and buyers nervous about stepping in to buy anything at this point in time. So again, once that turns and the technicals come charging back in again, it's again, I know it feels painful. I know it feels like there must be the giant hand that's moving the market against people, but it's just a combination of these market forces that happen from time to time. And, the key is always have enough cash on the sidelines, so you can take advantage of these sell-offs when they happen.
But that's a really important point that you make there with regards to, how the companies need to set themselves up for moments like this to stay in control. You're CEO. And you're always going to get complaints from retail about dilution. Why would you do that? Why would you take that money now? It's, whereas you're looking out and going, I possibly have a sense of what's coming because, this happens seasonally or it happens annually. We need to protect ourselves. I don't necessarily want to make it about Canada Nickel, but to that point. No, that's a great point. Is, again, when companies take way too much money, at way too punitive a price, that's bad. But there's a lot of there are only certain windows when the windows open that you can raise capital, and so you need to make sure that you've got enough money in the banks, so that you can easily get through any of these kind of bumpy time periods, without blowing, because what's even worse than raising money, that a little extra than what you need at a certain point of time, is then realizing you're a couple million short, and then having to go out in a time period like we've just been through, and say, please may I have some, and then getting taken to the cleaners at that point in time by the French clergy.
Yes. Sadly.
Sadly true. Should we talk about a little bit of company news? In fact, no. Before we go into that, we'll just one more thing on the macro, okay? Because again, we've seen most natural resource junior companies come off, right, in the last 4 weeks. You're nothing unusual with you guys. It's come off because people seem to be nervous about what's happening with the US economy. what's happened generally with, the feeling that this thing can't go on forever. You've got some naysayers and some yaysayers arguing their point, and maybe we'll spend our way out of it, or maybe we need to start actually being a bit more responsible. No one knows. That's the point. But what we are seeing is that people are taking cash off of the table. They've just done it in the uranium and I guess to a greater degree some of the other battery metals, and they're waiting to see what happens. Do you think that there's a moment coming up that they're looking to, and do you think that they will start afresh in the new year as they always do, or is that just that overhang of this financial burden going to just sweep on into next year?
Yeah, I think to my mind, there's two paths that happen. One is most likely they'll kind of sit on their hands until mid-December or early January. Again, if they move in December, it's just window dressing their quarterly statement. So, people, they can look smart based on what they did in the final 2 weeks. And then again, piling in at the beginning of a new year, you've got 12 months to be right or wrong. So that's oftentimes where you see, particularly down in the developer space, where you see stuff in. I think what might be a catalyst to have that happen sooner is, if you see some real corporate M&A activity. So again, the corporate's taking advantage of the fact that, that development story that I liked has just now come off 30%. Boom, now I'm going to take a strategic interest, or now, boom, I'm going to, make a bid for it. After it's come off. So if that does happen, then I think people go, these are cheap, and the money comes piling back in. But it's going to be, they'll need one of those triggers before mid-December. Otherwise, we're looking at mid-December, January before things really start to move substantially higher from here.
Yeah, I'm kind of keen to say it plays out. Just from a psychological point of view, in terms of investing strategy and mindsets, institutional, retail, everyone, they all seem to be acting as one in terms of the state of play. And I don't know if I don't know what the moment is, but we shall see. Let's talk company news. Okay, we're gonna whiz through a few names here. Okay, I'm going to start off with an Aussie one. Now, some of the best discoveries in the world have been made with the last drill hole by total accident, and I think this probably falls into the latter category. So, what are we seeing over there?
Yeah. So, in the great history of nickel exploration, we're a number of, sadly, we are so short of discoveries that, a number of discoveries that have been made have been by accident. So, one of the best ones in the last little bit here in Canada prior to Crawford was the Grasset discovery, which is just across the border from us in Quebec. Again, drilling for gold, boom, hit nickel. Widgie, who just got spun out from Neo Metals, and we've talked about some of their properties. Anyways, they've optioned out one of their properties to a company who was drilling for gold. And I think they've hit probably the best nickel intersection this year, 24 meters at 3%, and which included 16 meters at 4.5% nickel with a little bit of copper, and a gram of PGMs, from just 59 meters deep. Now, it was into an existing resource. They were looking for gold that was nearby the nickel resource, but they obviously hit a pretty nifty little pod there of nickel. So, we'll see what happens. There's still holes, above and below it. So it's not like it's a brand new, piece of territory before. But again, if you, got a little bit of high grade there, there's a chance you might find some more. And it speaks to the potential of that overall land package. If one of those tenements and some of that resource has that kind of potential to generate higher grade gold. And again, sort of bringing up Grasset, I'll pick on them a little bit because it's part of Wallbridge, who's $1 billion gold company. So, Grasset is a great example, and we're going to talk to some drill results that have come out. The way nickel deposits get formed is if you've got fluids coming out, what typically happens is that at the bottom or on the sides, if you get a place where things can settle out, that's where you get some high grades come out. And so, people sometimes, they had 4% drill intersections. Why do they end up with a 1.5% resources? So the challenge is that where the opportunity is that high grade piece that lights up the most. That's what people tend to drill first. But then you end up with a bunch of disseminated nickel that's lower grade that's beside it. And so when you then put a mine plan around it and say, okay, what can we actually mine? You end up having to take a bunch of the lower grade with that high grade. So again, if you're serious about nickel investing and really want to understand that phenomena, if you go back to some of the early drilling around Grassa, they had some spectacular intersections. Again, some of the best intersections that have probably been drilled in the last 15 years. But when they came up with the resource, it was about 5 million tons or so at about 1.5% nickel. And again, so that's that kind of framework. So, some of the resources results recently that have been out, again, some of these are not going to fall in that bucket. They've had some decent continuations of grades. But, Talon put out 13 holes. Again, some decent thicknesses and grades. So, multiple meters at 4% nickel, and decent copper and so forth within 10 to 15 meters of about 1 to 1.5% nickel. The other one that's come out that has had some high grade hits was the Gungnir metals in Scandinavia. There are only 4 or 5 holes in, but on that one again they had 6% over 0.3 meters. But that was within an interval of 36 meters, at 0.9%. So again, you should, if you see some multi-percent nickel, you should always be interested. Number one. 2, if they're able to extend that for any kind of distance, that's even more exciting because that's another big threshold to get through. And then 3, just keep in mind that you do need to get some real dimensions around that high grade to really end up with a high grade resource, and that's kind of the third hurdle you have to get to before you end up with a Voisey's Bay or a Kabanga type deposit.
Okay, I hadn't actually been looking at the Gungnir metals one. I'll take a look at that. The one I had been looking at, because I think people are going to expect me to eat humble pie here, but I'm not. Is Horizonte got financed, which is good.
Yeah, no, it's great. It's good to see project finance money come into the nickel space. And so they got 2 tranches of debt. Again, one, when you do a project finance facility, a portion of it can be guaranteed by export credit agencies. And so, that's at LIBOR and 1.8, 180 basis points. And then the other tranche at LIBOR plus, 425 to 475. The other good thing is the tenor of it. It's 8 to 10 year money. So, that's a really, really great project finance facility and a great outcome on that. So, I think that sets the stage there. The key now will be in terms of getting the rest of the equity package that has to go along with that debt. But, with Orion Resource Partners having the royalty, I think a royalty or they have some sort of financing in there. Can't remember, but Orion obviously is a deep pockets partner and has helped finance projects into production. So again, we're desperate for new nickel sources of nickel, and this really is one of the few sources of production that can come to the market over the coming decade.
It'll be interesting to see if Orion come to the table with the equity and if how they price that, and how much the company's willing to stomach just to get the thing over the line, because they can always refinance stuff out at a later date, I guess, would be part of the thinking from Orion, and obviously the management team too. So, okay, that's one to watch further down the line. Look, let's just stick on it a bit. They've got to get it built. They've had the right people involved in the study, have they, in the design?
Yeah. Ausenco did a chunk of the work on the feasibility study. They don't do a lot of pyrometallurgy work, but in general, they're pretty good engineers. So again, it's good to see something get down to that next stage of getting closer to production, and good to see the project finance banks be able to underwrite a nickel project. Because it's been a while since we've had some, and again, there's been, laterites. Brazil's a much better risk than New Caledonia and some of the other places. It hasn't helped, laterites get over the line. But again, it's very good, and kudos to the Horizonte team for getting this financing done.
Yeah, fantastic. It's really, really good news for the industry. I'll have to go back and reacquaint myself with the numbers on that. That's the scale of that operation. the other one was, and we've had them on the show actually, and we've talked about them quite a few times on here. Is obviously Centaurus as well. We've had some nice results with them, some solid step outs.
Yeah. Again, there, the when you look at the size of the step outs people are doing, you should read that through in terms of confidence around the geology. If they are if they're taking fairly sizable step outs or versus drilling 5 and 10 meters away from where they just hit, that gives you some idea. And so again, they're doing 50-meter step outs. They've got several different deposits within the overall land package, and they're challenged with the same thing that all of us in the industry are, is in terms of timing of assays. But they hit multi-percent nickel in one hole over tens of meters, and then have delivered a whole series of holes at 50-meter step outs that have similar thicknesses of similar looking mineralization. So again, that's a story that just keeps getting better and better in terms of them outlining it there. So
okay, and I'm going to talk about you in a second, but before I do, I just want to talk about your neighbor, Class 1 nickel. What did you make of that?
Yeah, they picked up a past producer, the Dundonald mine. So, prior to us, the history of nickel resources in the area was, again, sort of, million to a few million tons of nickel, around 1.5% nickel that were mined underground. And so they picked Dundonald, and sometimes higher grade than that, 2 to 3% on smaller quantities. And they've been they picked up the Dundonald project, which is a past producer. Unfortunately, one hole missed the target. Again, drilling, sometimes the rocks force the drill bit away from where you want to go, and this one just clipped the edge of it. So they did hit high grade, but it was a relatively narrow interval. So we'll see how that story evolves. They have other drill holes done, so we'll wait and see where the assays come back with on that one. So.
Okay, well, let's. Okay, we'll step back and observe from afar. You guys put out a press release. Reaction has been really, really positive. I thought it was actually quite a well-written press release.
Thank you. Takes a little bit of time to get there, but again, good news makes it easy to write a good release. So we I've only done a year's worth of metallurgy on these deposits, and again, these are things that take some time to get 100% right. And again, we did some very simple changes that delivered a 10% improvement from what we had, the flow sheet we'd used for the PEA. We're kind of banking on 4 to 5 percentage points of improvement. And the key thing there is, every percentage point improvement in recovery is $90 million US in terms of NAV. So it really is a huge step change in terms of value. And so again, hitting 10% on that one, and then we released the results on some open cycle tests, where we get anywhere from a 9 to 16% improvement. So
hang on, you're saying your NAV has gone up 900 million bucks. So we just said,
if you extrapolated the full 10 points, we're targeting 4 or 5.
Right.
We'll
okay.
But you
got my attention.
It's there. No, it's been great, and
wow.
The market obviously understood it because the stock moved about 11% yesterday. So, which is excellent.
Okay, good on you. What else have you got? What else are you doing? Because that's
more news coming. No, stay tuned. We're pushing hard on multiple fronts. So again, and when you get to this stage of the project, it's not like a single drill hole here or there is going to move the needle. It's bigger things, and bigger things take a little more time. But we're moving ahead on multiple fronts. So
multiple bigger fronts. Okay,
so.
Now I'm intrigued. Good. Okay, you're not like going on holiday till Christmas then, because I want to stay in touch with you. Multiple bigger fronts. Hey, well, this is I want to talk to you about this as well, because it's a sort of salutary moment and reminder that not all companies make it. Things go wrong more often than not. And I want to talk to you about Premium Nickel Resources, because they put out an announcement about picking up some assets. What do you know about that?
Yeah, these are these assets were in operation for multiple decades. They're in Southern Africa, and they are, they have the challenge of being lower grade deposits in places with not necessarily a huge amount of infrastructure, located several hundred miles from a coast, and a challenge of making a very low grade concentrate in terms of what needs to get processed. So, they got shut down at the end of the last nickel boom. In 2010, 2011, and have kind of sat there. They were owned by Norilsk for a while. They were part of the Lion Ore, $5 billion. Norilsk bought Lion Ore, and then ended up shutting down almost all of the assets that were in the Lion Ore portfolio over the 5 years that they bought it. We looked at it back in 2011 or 12 when I was with RNC. And again, it was just, there's potential there. So Premium Nickel Resources, thinks they've got some a different way of looking at the metallurgy, and they've got some exploration upside ideas. So, again, they are large resources that are there. So, will be interesting to see, whether those come back. And again, the great thing is, there's no shortage of unemployment in those parts of Southern Africa. So, it would be great if they can, find a way to unlock the value that's there and get those things headed back to production. And again, I know I sound like a broken record on this. We need all the nickel we can get and then some. So, it would it'd be great to see some new sources of production come to market.
Yeah, maybe one for another day, but we should talk about some of these reboot things. We've done a few articles on sort of retread stories and reboots and restarts, and sometimes they work, sometimes they don't, and what people are looking for. Because I kind of like these sort of end of life stories. There's a long established model of, you get, whether it be oil and gas or mining or whatever. These end of life projects can be very, very meaningful if you can pick them up at the right price and the liabilities aren't crazy. In fact, sometimes you get paid to take them. So yeah, it's lovely.
Oh no, for sure. No, and I think that's the key thing is, it's whatever as long as the purchase price is low enough. So you really are taking an option on something. And then two, again, where these stories make sense is where they really do have a credible piece of technology, or a new exploration, using new exploration techniques that maybe weren't used 30 or 40 years ago, on that particular property. That's when, projects that are sort of coming back to market can be exciting. Again, the things that I don't talk about, with nickel getting a bid, there's probably been 15 or 20, projects have been around for 30 years that people are identifying targets and, very slowly moving through stuff, but there's really nothing new that's at the table. So those ones stay away from, these ones where they say they've got a new approach that they want to use and have some track record of that, those are the ones that could be interesting. So
I'd love a list of those stories, of those stories and companies. Might sort of tap you up. One last one here on Ford, right? So in the end, in the broader industry, the broader EV conversation, there's obviously a lot of money being pumped into this. I saw a great headline the other day. I think one of the members put it in the private platform around, actually Tesla's got some competition coming up sooner than they thought. So a lot of the other OEMs are really kind of accelerating. See, and the rubber's hitting the road. I'm trying to think of other car.
Another car analogy.
Yeah. But Ford have just made an announcement, which I thought was, part of the course, but it's good to see.
Oh yeah, again, another with the Asian partner in terms of making high nickel batteries. Each $4.5 billion to add 3 plants. With production starting up in 2025. As much as there are sort of nickel retread stories, it's amazing how many battery plants are being built globally. We could probably spend 15 minutes each show just talking about, and there's been a whole slew of announcements over the past month in terms of new capacity being built. So, again, for the nickel story is when you have a shift, oftentimes those shifts don't materialize. But when a shift does get traction, it almost inevitably ends up happening far faster far larger than anybody expects. And so, that, to my mind is what we're seeing happen in the EV sector and battery metal sector. And yeah, again, I'm I'm glad that all these plants are coming, because they'll be looking for local sources of nickel, and there are very, very few sources available. So I think it just helps underpin what that medium term, long term bullish market sentiment looks like.
But you saw the note that SK said they've got a back order, okay, of 1,600 gigawatt hours. So that's like the equivalent. What is that? 27 million vehicles or something like that. That's today.
Yeah, it's huge. Yeah, no, that's when you see nickel demand from EVs in China for, because that's where a lot of the battery material plants are right now, and it's up 120% year over year. And, why I think most analyst forecasts are so low is, that's a backlog, that needs to get filled, and it's not like, oh, it's going to get filled in 10 years, that's going to get filled, they'll want to fill that sooner than later. And so that's the kind of, we had 100% growth next year. As long as the capacity gets built, there's no reason why we shouldn't see 80 to 100% growth next year, right? And that's just nowhere near where analysts are forecasting, the market to be. So, massive upside from where we are now.
Yeah, and I don't think people realize how many of these gigawatt factories are being built. Because like one of the projects we're invested into is Cobalt project. They measure themselves well. Our total resources, which is not insignificant, that's half a gigafactory. That's half a gigafactory. And we're one of the biggest, ex-DRC cobalt projects in the world. There's not enough of a lot of stuff, which begs another question, which is, what the heck are we building here? Because I tell you what, recycling better work. If it doesn't, we're in trouble.
Well, they're going to have to start wrecking cars to be able to get enough recycled material, because there's just, again, we're doing a first fill with everything. I mean, recycle, like in the PGM space and like in the stainless steel space, recycle is a huge volume of material that gets done. But, again, people have to go through the first life cycle of the battery before you get to recycle it, and most people are buying their first electric car at this point. So it's, our recycle volumes is going to be a 2030 source of supply, not a 2020 source of supply.
Yeah. Hey, Mark, well, good to have you back behind the desk and helping us learn a little bit more about what's going on out there. Look forward to seeing you next week with more news. Speak then.
We'll see you next week, sir. Take care.